Welcome to the deep dive. Today we're digging into something interesting with Cisco. They just announced their Q4 2025 results. Earnings and revenue actually beat expectations.
Right.
But the stock still dipped a bit, kind of a head scratcher.
Yeah, it definitely caught some attention.
So we're going to unpack these numbers, try to understand that market reaction, and really look at Cisco's guidance and where they see the big opportunities, especially, with AI everywhere now. Okay, let's start with the numbers themselves, the Q4 results.
Yeah.
So earnings per share non-GAAP came in at 0.99, which was just above the 98 forecast.
That's light beat, yeah.
And revenue was $14.7 billion, also a bit higher than the expected $14.62 billion.
Okay.
And that $14.7 billion, that's actually an 8% increase compared to last year. Total revenue year over year.
That's pretty solid growth.
Yeah, and non-GAAP net income was up 12%. EPS up 14% year over year. Looking at the whole fiscal year, revenue hit $56.7 billion. That's up 5% from the year before. So, financially, it looks pretty good on the surface.
Definitely sounds like a strong quarter, strong year even.
But here's the twist. Despite all that positive news, the stock, well, it fell 1.42% in regular trading. It did pop back up slightly, about 0.5%, in after hours. But that initial dip, that's what's puzzling.
Right. It wasn't the reaction you might expect given those numbers.
Feels like maybe expectations were even higher or something else is going on.
Well, that market reaction is the fascinating part. You have these robust results, but the stock takes a hit. One possible angle comes from Investing Pro analysis. They suggested Cisco might look overvalued based on their fair value calculations.
Okay, so maybe the good news was already priced in or even more than priced in.
Exactly. It could mean the market, even seeing good current performance, is looking harder at the future growth pace, especially compared to maybe pure play AI companies. Investors might feel Cisco's future potential, while strong, is already reflected in the price, or maybe, its traditional business still weighs on the valuation a bit.
So strong earnings aren't always an instant stock booster if future expectations are sky high.
Precisely. It's about that forward look. But it's really important for you, the listener, to see beyond just that immediate stock move. Cisco's underlying financial stability is, well, quite solid.
Right. They're not exactly a startup.
Not at all.
Yeah.
They've paid dividends for 15 straight years. That says a lot about their cash flow consistency.
Okay.
In Q4 alone, they returned $2.9 billion to shareholders. That breaks down into $1.6 billion in dividends and $1.3 billion in share buybacks.
Wow, that's significant.
It is. And for the full fiscal year, 25, $12.4 billion returned. That's like 94% of their free cash flow.
94%.
Yeah. And it's actually more than the $12.1 billion they returned in fiscal 24. So it's not just talk about shareholder value. It's a concrete action, showing confidence in their cash generation. It paints a picture of a really financially disciplined company.
Okay, that's a strong foundation. Serious cash return. So if the numbers were good and they're returning value, what's actually driving the business forward, especially if the market reaction was a bit muted? What are the key strategic things propelling them?
Well, the big story, unsurprisingly, is AI. It's becoming absolutely central to Cisco. CEO Chuck Robbins really hammered this point. He said, and I'm paraphrasing slightly, that network capacity needs are just going to explode as AI agents start doing tasks on their own.
Right. AI isn't just happening in the cloud compute part. It needs the network.
Exactly. It's the whole infrastructure.
Yeah.
And he stressed they're innovating fast, making AI foundational in our designs. It's not just bolted on, it's built in.
Okay.
And the numbers back this up. AI infrastructure orders from their big web scale customers, the hyperscalers built in the cloud.
Google, Amazon, Microsoft, those guys.
Yeah, them. Those orders topped $800 million just in Q4.
$800 million in one quarter.
Just in Q4. And that pushed the total for the fiscal year over $2 billion.
$2 billion. Wasn't their target like $1 billion initially?
It was. They more than doubled their original target. So that shows some serious momentum, real demand for Cisco's piece of the AI puzzle. And that demand from the web scalers is really strong. Triple-digit order growth for the fourth quarter in a row.
Wow.
And get this. 4 out of their top 6 web-scale clients individually showed triple-digit order growth. So it's not just broad, it's deep with the key players.
Okay, so the biggest players are really leaning on Cisco for AI build-outs.
Seems that way.
Here.
And they're also talking about sovereign AI opportunities picking up in the second half of fiscal 26.
Sovereign AI. You mean Countries or regions building their own AI cloud?
Exactly, driven by data privacy, national security, that sort of thing. It's a big emerging market.
Hmm.
Cisco basically breaks down their AI opportunity into three main pillars. First up is AI training infrastructure. This is for those web-scale customers building the huge data centers to train the AI models.
Got it. The heavy lifting part.
Right. They're deploying their high-end 8K series switches, their custom Silicon One chips, advanced optics, all the high-performance stuff needed.
Silicon One, that's their own custom chip, right? Helps them optimize.
Yeah, their own ASIC.
Yeah.
Designed specifically for high-performance networking, crucial for AI workloads. And they see demand growing here, not just from the usual hyperscalers, but also from what they call neo-cloud providers, smaller AI-focused cloud companies, and those sovereign customers we mentioned. The second pillar is AI inference in enterprise clouds. This is where the trained models actually get used.
Making predictions, doing tasks.
Correct. Here, they're pushing innovation in hardware and software and really leveraging their partnership with NVIDIA.
Ah, the NVIDIA connection. How does that play out?
Well, for instance, their Nexus switches integrate with NVIDIA's Spectrum-X architecture. The goal is to make AI deployments simpler and less risky for enterprises.
Simpler and less risky, meaning companies don't need to be deep AI experts to get started.
Pretty much. The integration helps ensure the network is optimized for NVIDIA GPUs, reduces bottlenecks, makes it easier to scale securely, and they're seeing enterprise AI orders ramp up pipeline already in the hundreds of millions. Their secure AI factory with NVIDIA offering gives businesses a blueprint for building these secure AI-ready data centers. That's a key differentiator. And the third pillar, maybe the most foundational for Cisco, is network connectivity.
Their core strength.
Absolutely. Customers are using Cisco gear to modernize, secure, and automate networks specifically for AI agents and apps. And this idea of agentic AI is critical. We're talking AI models acting autonomously, constantly talking to each other, generating traffic.
Not just responding to human queries, but doing things on their own.
Exactly. Initiating tasks, research, managing systems. This means network traffic becomes consistently high, not just bursty. It's a constant flow.
Which makes the network, its robustness, security, intelligence, absolutely non-negotiable.
You got it. That's where Cisco sees its traditional strength as vital for the AI future.
That makes a ton of sense. If AI agents are running wild, the network has to be locked down and super reliable. Which brings us straight to security, right? That must be even more crucial now. How's Cisco doing there?
Security is definitely a huge piece of this. The segment saw mid-single-digit order growth in Q4. Solid, given how competitive it is.
Okay.
A big win they highlighted is the synergy with Splunk, the company they acquired.
Right, the data security and observability platform.
Yeah. Their combined efforts led to a 14% year-over-year jump in new logos for Splunk in Q4. Over 300 new Splunk customers added in Q3 and Q4 together.
So the cross-selling is working. Customers see the value in the combined offering.
It certainly looks like it. Better visibility, protection, it seems to resonate. And beyond Splunk, their newer security products, things like Secure Access, XDR, Hypershield, AI Defense they're ramping up to.
Next-gen stuff.
Yeah. Focusing on zero trust, better threat detection, network segmentation, these added 750 new customers collectively in the quarter.
And the growth rate for those?
Order growth for that new portfolio was over 20%.
Pretty strong.
And one interesting detail, lots of new Hypershield customers are buying it bundled with the N9300 Smart Switch.
Why is that significant?
Because Hypershield embeds security directly into the switch, into the network fabric itself. Security isn't just layered on top, it's part of the infrastructure. That's huge for securing these dynamic AI-driven environments where the old perimeter defenses just don't cut it anymore.
Okay, AI and security are clearly huge. But what about Cisco's traditional core business? You know, the networking gear itself. Is there a broader refresh cycle happening that's also helping? The network still needs to be the network, right?
Absolutely. And yes, that's a big opportunity they're capitalizing on. Networking product orders actually grew double digits in Q4.
Double digits, okay.
And that's the fourth consecutive quarter of double-digit growth. So it's accelerating.
What's driving that?
A key factor is the new family of Cat 9K smart switches. These are powered by that same Silicon One ASIC we talked about for AI.
Ah, bringing their custom silicon to the campus network, too.
Exactly. This kicks off what they see as a major multi-year refresh cycle for their massive installed base of campus switches. Think universities, large enterprises. Many have older Cisco gear.
So companies aren't just replacing old boxes, they're upgrading to something AI ready.
That's the idea. preparing for that agentic AI future we discussed. The network needs upgrades with embedded security for reliability, safety, performance. It needs to handle that constant AI traffic. And another big move, they launched a unified cloud platform integrating Meraki, that's their cloud-managed stuff, and Catalyst, their traditional on-premise gear.
Okay, bringing those two worlds together.
Yeah. It gives customers choice manage on-prem or from the cloud. But crucially, it rationalizes the hardware onto a single platform.
Simplifies things for customers and for Cisco.
Right. Less complexity, easier management, lets customers evolve without a total rip and replace. It's a pragmatic way to meet different needs while streamlining their own offerings.
Makes sense. Future-proofing while simplifying now. Okay, let's shift to the future then. What guidance is Cisco giving for fiscal year 2026? What should we expect?
Okay, so for the next quarter, Q1 fiscal 26, they're guiding revenue between $14.65 billion and $14.85 billion.
Right.
And non-GAAP EPS between $0.97 and $0.99.
And for the full fiscal year 2026?
Revenue guidance is set between $59 billion and $60 billion. And non-GAAP EPS forecast is $4 to $4.06.
$59 to $60 billion revenue. $4 to $4.06 EPS. Significant numbers. Now, I know some analysts looked at that full-year guidance and felt it might imply maybe a bit of a growth deceleration compared to the AI hype train. Is Cisco being cautious, or is this just, reality setting in after a strong run?
That's a fair question, and Cisco addressed it. Their take is that any perceived slowdown is mainly due to tough year-over-year comparisons.
Meaning last year was exceptionally strong, making the growth percentage look smaller this year?
Pretty much. Especially with customers pulling orders forward during the supply chain crunch periods. They insist it's not a change in demand or a slowing of their strategy. They still expect growth in service provider, enterprise, public sector.
So, normalizing growth, not declining opportunity.
That's their message. And the CFO, Mark Patterson, stressed their focus remains on durable, profitable growth, financial discipline, transparency, and returning value dividends, buybacks, the whole package. It's a long-term stability play. They also flag some potential risks, which is standard but important. Things like lingering supply chain issues, obviously increasing competition in AI and networking.
Competition's definitely heating up there.
For sure. Facing giants like NVIDIA moving into networking, plus nimble startups. Then there's a broader economy potentially hitting enterprise spending, regulatory changes around data privacy, and just the sheer speed of tech change needing constant R&D.
And didn't they mention tariffs too?
They did. Specifically calling out tariffs on components from China, Mexico, Canada, which impacts their costs and pricing, even with some exemptions. Adds complexity to their global operations.
Okay, so wrapping this up, Cisco seems to be navigating a really complex tech world right now. Strong Q4 beat, but a mixed market reaction, and really ambitious plans, putting AI right at the center of everything.
Exactly. They genuinely seem to believe they're positioned to lead what they term a generational transition in networking and security, providing that absolutely critical plumbing for the AI era. As AI becomes more pervasive, that foundational network layer just gets more vital.
Which leads to a final thought for you, our listener. Think about Cisco embedding AI capabilities and robust security deep into the network fabric, using custom silicon, preparing for this agentic AI future generating constant traffic. How might that change your daily digital life? Could your online experiences become noticeably faster, maybe more personalized, potentially even driven by autonomous agents working behind the scenes, all happening seamlessly because the underlying network is built for it? Something to ponder as this AI transition unfolds.